So, in today's episode, I want to focus on my main mission of filling the tax literacy gap one taxpayer at a time by covering the issue of how long do you have to pay your taxes? See, per usual, there's so much misinformation out there about how long you have to pay your taxes that I completely understand why this is a confusing topic for taxpayers.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey, family, welcome to episode 58 of the Tax Relief with Timalyn Bowens podcast. Listen, it's May. We have tax season almost a full month behind us. So if you had a balance that you couldn't pay in full, you've received that notice or it's on its way right now. The IRS is reducing in size. So that makes it a little bit more difficult to negotiate with the IRS if you can't pay in full. So in today's episode, I want to focus on my main mission of filling the tax literacy gap one taxpayer at a time by covering the issue of how long do you have to pay your taxes? See, per usual, there's so much misinformation out there about how long you have to pay your taxes that I completely understand why this is a confusing topic for taxpayers. Because is it 30 days like your CP 14, that demand for payment says? Or do you have 180 days? Do you have 3 years? Does the IRS have 10 years to collect from you? Like I said, it's so confusing. And with the IRS reduction in force, it's harder for you to get somebody on the phone. So I want to lay it all out for you here today in episode 58 with how long do I have to pay my taxes? Okay. Because the last thing that we want is for the IRS to issue a tax lien with your county clerk declaring dibs on your assets, right? Then we don't want them to take it from there and issue a levy where they're going to clear out your bank account, garnish your Social Security or your wages. We don't want any of that. So, when we are looking at an IRS balance that cannot be paid in full, remember communication is key in every relationship. The IRS is okay with you not being able to pay in full as long as you have an understanding with them with when you are going to pay. So, yes, that CP 14, that notice with the demand of payment, does give you 30 days. However, if you can't pay within that 30 days, your first option is going to be a not shirt, short-term payment plan. This is going to be up to 180 days. Now, if your debt is under $50,000 and you have an account at IRS.gov where they use the ID.me, you can actually log in yourself and set up this short-term payment plan. Okay. Now, this 180 days, 6 months is going to give you more time to pay, but please keep in mind that any interest and failure to file penalty are going to keep accruing. The failure to pay penalty. Excuse me, I'm just waking back up from after tax season. The failure to pay penalty accrues based on the amount that you owe and the number of days that you haven't paid that balance in full. Okay? So, if this is your first year ever having a balance, or at least the past 3 years. So 2023, 2022, and 2021, you didn't have a balance when you filed your taxes, that failure to pay penalty is likely going to be eligible for first-time penalty abatement once you get the balance paid, okay? Now, I have an episode all about first-time penalty abatement, what type of penalties are eligible, and how to request it to have that removed or refunded. I will link the podcast episode for that in the show notes. But let's say that you can't pay it within that 180 days, okay? There are other alternatives that we consider long-term payment plans. Now, one of my faves, right? If you owe $10,000 or less, you were compliant in the past 3 years, so you didn't have balances those past 3 years, you haven't had penalties of any sort, you didn't default on any other payment plan, then you may be eligible for what we call a guaranteed payment plan. Okay, because the IRS, again, is going to be understanding you're not typically in this situation, so they're going to have a little bit more leniency. With setting up this guaranteed payment plan, you have 36 months to get this debt paid off. Okay, so we've gone from the 30 days that CP14, the notice and demand of payment, gives you. But if you're in communication with the IRS, you could potentially have 180 days, right? And you can request that online with the online payment agreement application. If it's under the 50,000, now otherwise you have to call the IRS, which isn't exactly ideal right now, right? But if you can't get it paid within the 180 days, again, the long-term payment plans, essentially a payment plan is going to be what we call an installment agreement. So I already talked about the guaranteed installment agreement. If you owe $50,000 or less, typically you can qualify for another plan where you can set it up online as long as you can get it done within 72 months. You want to make sure that you update your withholding or pay more in your quarterly estimated tax payments and sign, sealed, delivered. You're all good. You get 72 months to pay, right? Now, sometimes people get the 3 years and 72 months mixed up because they are thinking about the amount of time that you have to claim a refund. That is 3 years after the original filing date. And that date is called the refund statute expiration date. Okay. But for an installment agreement, so for 2024, if you have a balance you can't pay in full, it's under $50,000, you likely, as an individual, can go onto your IRS.gov account, go ahead and set up an agreement for the 72 months, and you will be all good. Now, with that, keep this in mind, please. Even though you are getting more time to pay, this is still a debt. And you, unless you have your head under a rock, see our economy right now, you will have to pay interest, and any penalties as well will continue to grow. Okay? So if you're listening to this and you're like, shoot, I don't want to file my taxes because I know I have a balance, go ahead and get those taxes filed, because right now you have a failure to file penalty just building. You also have that failure to pay penalty just building. But again, you want to get it filed as soon as possible. If these penalties are eligible for abatement or forgiveness, make sure that you go check out those podcast episodes, which I have linked in the notes, because if they qualify, that's another area where we can get this debt reduced. And if you've already paid the penalty, we can potentially get that refunded to you. Okay? But let's say you owe more than 50,000. With that, You cannot request an installment agreement online, but you can request it with a Form 433D, which I'll link down below, or with a 9465. Now, with this, even if you're going to pay it within the 72 months, you do have to call. And in addition to calling, the revenue agent who does your intake on the phone, they can say, okay, I think this looks good, but it does have to be approved by their manager. Now, you'll receive notification of whether or not it was approved by mail within 14 days in a perfect world where the IRS is working like it's supposed to. I can tell you from my personal experience, it's currently May, and I'm still waiting on some of those approval letters from agreements I set up back in January. The IRS is severely behind when it comes to approving arrangements. But what they're not behind on right now, or at least they're working on getting caught up, is issuing levies. So make sure that you are doing your part to get the agreement set up, to communicate with the IRS, because you don't want to wake up and have an email from your bank showing that you have a negative balance because the IRS came and cleaned house. Okay? Now, let's say it's not over 50,000, but maybe you can't pay it in full. When we look at that and how long you have to pay, that's when we take a look at how long the IRS has to legally collect. The IRS legally has 10 years from the date that the tax was initially assessed to collect on that debt. That date, the last date they can collect, is called the collection statute expiration date, also known as the CSED. Now, there are events that can take that date out. For example, if you file for bankruptcy, the IRS cannot issue a levy during that time. For that reason, the time period that you were in the bankruptcy is tacked on to the CSED. Okay? If there's any other type of legal action that would stop them from collecting, if you have a pending installment agreement, that is also going to keep them from collecting. So that is something you just want to keep in mind, that the IRS legally can come after you for 10 years. This is why we see a lot of failed offer and compromises. Now, an offer and compromise is a viable option for people who owe the IRS and can't afford to pay in full. However, when the IRS is looking at those applications and requests, they're looking at the age of the taxpayer, their ability to pay, and their assets. If you have a 2024 tax debt and you are wanting to pay in a lump sum, the IRS, unless your income is limited, you have your potential to earn is not high, the IRS has 10 years from now to collect on that. So the chances of them offering or accepting an offering compromise when your ability to earn income is still there and you have assets is slim to none. Now, that's not the case for everyone, but if you want to check and see what it is for you, the IRS does have a tool, which is the IRS OIC pre-qualifier. If you want more information about that as well, of course I did an episode about it. I'll link that too. Now, you've heard it all from me. The most amount of time that the IRS has to collect is 10 years. If you do a partial pay installment agreement, that is how far out your agreement will be to the CSED, okay? If you set up a streamline agreement, which is under 25,000, you have 72 months. If you can pay in full within 72 months for a long-term payment plan, you have 72 months to get it paid off. If you only need 180 days, you do qualify for a short-term plan based on certain criteria, such as the amount that you owe, your current tax compliance, which is going to be your withholding or estimated payments, and also how many returns you have filed. So you can't have any tax returns missing if you're going into this agreement. Okay? So there is wiggle room within the 30 days that CP14, your notice and demand for payment, have on it. However, to get that wiggle room, you have to make sure that you are in communication with the IRS, because negotiating back taxes is a privilege, not a right. Okay? Now, if you listen to this and you said, hey, I definitely am going to work on getting in one of these arrangements, but I need a little bit of guidance, there is a call at bowenstaxsolutions.com to help you DIY your situation, where you can come with your transcripts and whatever other documentation you have, and I can guide you through the process. Now, this is a paid call and we'll be on Zoom for an hour. But if you listen to this and you said, this information's good, I'll check out the other podcast to educate myself a bit, and you're like, I still don't want to do this myself, you can book a tax relief call with me. It'll be 15 minutes and we'll have a conversation about your debt, how you got here, and to see if you're a good fit to work with me and my team at Bowen's Tax Solutions. You can also find this on the website at www.bowenstaxsolutions.com. But just keep in mind, I'm rooting for you. I don't want you to get levied by the IRS. So even if it's not me, make sure that you get the help you need. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family, because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.